because people often ask us what the difference between the standard and the enhanced. The enhanced policy covers everything that's already covered by the standard. So as the name suggests, it's enhanced. It provides additional coverages. So if you have a survey and you're getting a survey as part of the closing process, the enhanced policy does provide additional coverage for boundary line issues. So for example, if a structure like a fence, a shed, or a house on your property is encroaching onto the neighbor's property, so it's across the boundary line, then the enhanced policy will pay out up to certain limits to remedy that encroachment. So they could move that shed back onto your property, they could reconstruct the fence, they could take it down. Again, they're either going to fix the issue, they're going to pay you for your loss, or hire an attorney to defend you in a lawsuit to make sure you're compensated. Permitting issues are also protected under that enhanced policy. So if, for example, there was a recent addition or renovation on a property and permits were not properly pulled or closed out, the policy will pay out to certain limits to remedy those permitting issues. Zoning issues also protected under the enhanced policy. So for new construction, it's possible that the builder or developer exceeded the maximum units or building code regulations for that property. The city or county can come back after construction, require alterations to that structure. So say the property, the 2 acres that the developer has, the county says you can build 4 houses on those 2 acres. If the developer says, screw it, I'm going to build 5 houses, that 5th person could be out of luck, right? That whole section, the subdivision, is out of compliance. So the county can come back and require alterations to the structures. They could say that 5th house needs to be torn down in order to ensure compliance with zoning requirements. More often than not, whoever's representing them will petition the county for a variance or an exception to that rule. But it is possible that the county in that situation could require that unit or that house to be torn down. So if you have title insurance, you're protected under the enhanced policy. If you don't have the enhanced policy, you may have to resolve that issue on your own, hire your own lawyer, make sure you're good on that front. So the policy in that situation would pay out those limits to remedy that issue.
So Kim, the examples you were just giving us, it kind of reminds me of some people who will mistakenly think that they don't need title insurance at all because maybe they're buying new construction. But the example you were just talking about with zoning or permit issues can pertain specifically to new construction. And in that case, we recommend the enhanced policy for a new construction property. Is that right?
Absolutely. We get that same question with people who fix and flip properties. And as you can imagine, with people that are fixing and flipping, they want to be able to buy, acquire, fix, and sell the property as quickly as possible. So they'll often say, oh, I don't need title insurance because I'm only planning on holding the property for 60 to 90 days. But in my opinion, those are the types of people that need the insurance more than ever, because the insurance policy can act, as I call it, as a get out of jail free card, because it just says you can continue with the transaction. So if you're a fix and flip developer and you have a title insurance policy, you bought it when you purchased the property, you can show that policy to the next title company and it reassures them that all the work was done. They can reissue on that former policy and say, we are insuring from when you purchased it. So it's much less work than having to sort of go back through the full chain. The next title company will still do their own due diligence to make sure there's no significant issues, but it's sort of reassurance that another title company had already approved, said you were good to go, did not see any issues in that search. So again, it can help things move forward. As you can imagine, we mentioned those unreleased deeds of trust as a particular type of lien. So just to play out a scenario where this could be really important, especially in Maryland. So say we have a property that's being sold in Baltimore City. The parties come to us on January 1st, and that's when they close. The fix and flipper buys the house on January 1st. And then all of the liens, so the mortgage is paid off. So we at Allied will send a check to the company that holds the mortgage, the lender, the servicer, to make sure it's paid in full. But you can imagine how long it takes some of those lenders to actually file a release in the land records, right? So it doesn't mean that we send them a check and they can record the release the next day. Sometimes it takes 60, 90, 120 days. Sometimes we see it take a few years before that release actually gets recorded in the land records. So that having that title insurance policy is proof that that document or that lien was taken care of at the time of closing. So you don't necessarily need to wait until that certificate of satisfaction is actually recorded. Sometimes that title insurance policy can be the green light for the title insurance company to further insure the property when you go to sell it. So it's actually insurance on your ability to resell the property, not just insurance on your ability to take care of these legal issues associated with ownership.
Makes sense. What else you got for us on the enhanced title policy?
Increased coverage. So the enhanced policy increases in coverage up to 10% each year. The buyer owns the property up to 5 years. So what does that mean? If you buy a standard policy and you buy a $500,000 home, the maximum amount of coverage you can receive under that insurance policy is $500,000, the actual sales price of the property. If you have this enhanced policy, we all know property values are on the rise. They've increased significantly over the past few years. If you have an enhanced policy, your policy, the maximum amount you could receive could be up to that 150% of the purchase price. So an enhanced policy on a $500,000 home could be up to $750,000 in coverage. So good thing to have, especially given how prices have been increasing in the DC metropolitan area and in most markets across the country.
Yeah. Yeah. Agreed. So generally speaking too, I know earlier I was saying, we could recommend the standard title policy for a condo because on a condo, you don't necessarily need to cover things like the land that the condo's sitting on. For the enhanced policy, would it be fair to say that generally speaking, we would recommend the enhanced policy for a single family home?
Definitely. I have an enhanced policy myself, so I wouldn't be recommending it to other people if I didn't have it myself. I'm just not a risk taker. I don't want to come down the line to figure out that I have an issue. And so I have good health insurance. I have good life insurance. I believe in the insurance industry, and that carries over to title insurance too. I'm in the industry, you can imagine, title attorney, so I can review the land records myself. I can review the title search myself. I know exactly what to look for, but I still believe in having the full enhanced policy because, like I said, there's issues that are not yet known that could pop up. There's issues that could happen with the transaction, fraud, forgery on the rise. 21% of title insurance claims last year were fraud and forgery related, and I'm just not willing to take that risk myself.
Okay, Kim. So to sum all of this up, the standard title policy will give essential protection against past issues with the property's title, while the enhanced title policy offers broader coverage, including protection against future risks and value increases. Is that right?
Yep, absolutely.
Perfect.
So liens, of course, the most common title defect, but fraud, forgery are those less common, but the most costly, making up about the 21% of the total amount spent by title insurance companies on the claims. And that's what you're right. Absolutely. Enhance can protect you moving forward, even for some issues that arise after the date of closing.
So a buyer's choice really depends on their individual needs and how much peace of mind they want when it comes to protecting their investment.
Absolutely. It's all about one's risk tolerance.
Yeah.
There are certainly people that self insure.